Question 1. Which regulator is the primary federal overseer of the securities markets in this bond prices and yields practice set? Option A, IRS. Option B, SEC. Option C, CFTC Clearing Bank. Option D, FDIC. The correct answer is option B, SEC. The SEC is the main federal agency overseeing securities markets and enforcing federal securities laws. FDIC insurance relates to bank deposits, the IRS handles tax administration, and a clearing bank is not the federal securities regulator. Question 2. How can FINRA be best described on the SIE exam for the bond prices and yields review? Option A. A federal tax agency. Option B. A self-regulatory organization for broker-dealers. Option C. A municipal issuer. Option D. A bank deposit insurer. The correct answer is option B. A self-regulatory organization for broker-dealers. FINRA is a self-regulatory organization that writes and enforces rules for broker-dealers and registered representatives. The IRS is the tax agency, FDIC insures deposits, and a municipal issuer sells municipal securities rather than regulating broker-dealers. Question 3. Why does SIPC matter when a brokerage firm fails during a bond prices and yields quiz drill? Option A. It sets the federal funds rate. Option B. It ensures bank savings accounts. Option C. It protects eligible customer securities and cash up to limits. Option D. It guarantees investors against market losses. The correct answer is option C. It protects eligible customer securities and cash up to limits. SIPC protects eligible brokerage customers if a member broker-dealer fails and customer assets are missing, subject to limits. It does not prevent market losses, ensure bank deposits, or control interest rate policy. Question 4. When does FDIC coverage most directly apply inside the bond prices and yields study bank? Option A. When a customer has deposits at an insured bank. Option B. When a market maker widens a spread. Option C. When a stock loses value in a brokerage account. Option D. When a bond is downgraded by a rating agency. The correct answer is option A. When a customer has deposits at an insured bank. FDIC insurance applies to eligible deposits at insured banks, not ordinary securities positions. Stock losses, bond downgrades, and market maker spreads are investment or trading risks rather than FDIC events. Question 5. Where do market makers usually add value for investors on a bond prices and yields exam prep check? Option A. By quoting bid and ask prices to support liquidity. Option B. By guaranteeing a stock price cannot fall. Option C. By issuing new shares to the public. Option D. By recording shareholder ownership only. The correct answer is option A. By quoting bid and ask prices to support liquidity. Market makers support liquidity by standing ready to buy and sell at quoted bid and ask prices. Issuers sell securities, transfer agents maintain ownership records, and no market participant guarantees that stock prices cannot decline. Question 6. Who usually helps an issuer sell new securities to investors in this bond prices and yields practice set? Option A, underwriter. Option B, retail customer. Option C, custodian bank only. Option D, transfer agent. The correct answer is option A, underwriter. An underwriter assists an issuer with bringing new securities to market and distributing them to investors. Transfer agents handle ownership records, retail customers buy securities, and custodians hold assets rather than underwrite offerings. Question 7. If a company needs shareholder records updated, which party is most relevant for the bond prices and yields review? Option A, Federal Reserve Board. Option B, market maker. Option C, options buyer. Option D, transfer agent. The correct answer is option D, transfer agent. A transfer agent maintains ownership records, processes transfers, and supports corporate action record keeping. Market makers quote securities, the Federal Reserve influences monetary policy, and an options buyer does not maintain shareholder records. Question 8. Can a clearing firm reduce risk after a customer trade during a bond prices and yields quiz drill? Option A. Yes, by helping compare, clear, and settle trades. Option B. No, clearing firms only issue municipal bonds. Option C. Yes, by promising profit on every trade. Option D. No, clearing firms only create advertisements. The correct answer is option A. Yes, by helping compare, clear, and settle trades. Clearing firms support trade comparison, clearance, custody, and settlement functions after trades occur. They do not promise profits, mainly create advertising, or exist only to issue municipal bonds. Question 9. Does the primary market involve securities being sold by the issuer inside the bond prices and yields study bank? Option A. Yes, newly issued securities are sold to investors. Option B. No, it is limited to foreign currency trades. Option C. Yes, but only after a stock split. Option D. No, only existing shares trade there. The correct answer is option A. Yes, newly issued securities are sold to investors. The primary market is where issuers sell new securities to investors, often through an underwriting process. Existing shares trade in the secondary market, currency trading is a different market, and stock splits are corporate actions rather than primary offerings. Question 10. Should secondary market trading be viewed as issuer financing on a bond prices and yields exam prep check? Option A. No, investors trade already issued securities with each other. Option B. No, because securities cannot trade after issuance. Option C. Yes, because only underwriters can buy shares there. Option D. Yes, every trade sends new capital to the issuer. The correct answer is option A. No, investors trade already issued securities with each other. The secondary market is where investors buy and sell already issued securities, so proceeds usually go to the selling investor. New capital is raised in the primary market, underwriters are not the only buyers, and securities can trade after issuance. Question 11. Before identifying the third market, which trading idea should stand out in this bond prices and yields practice set? Option A. New issues sold directly by an issuer. Option B. Exchange-listed securities trading over the counter. Option C. Treasury bills sold only by auction. Option D. Mutual fund shares redeemed at NAV. The correct answer is option B. Exchange-listed securities trading over the counter. The third market involves exchange-listed securities trading away from an exchange, typically over the counter. New issues are primary market transactions, mutual fund redemptions occur with the fund, and treasury auctions are government issuance activity. Question 12. After institutions trade directly with each other, which market is being described for the bond prices and yields review? Option A. Physical certificate market. Option B. Primary market. Option C. Fourth market. Option D. Issuer auction market. The correct answer is option C. Fourth market. The fourth market refers to direct institutional trading without a traditional broker-dealer exchange role. The primary market involves new issuance, an issuer auction is not the same concept, and physical certificates are a form of security delivery rather than a market type. Question 13. During monetary policy discussions, which institution is central during a bond prices and yields quiz drill? Option A. Options Clearing Corporation. Option B. Federal Reserve Board. Option C. Transfer Agent. Option D. Municipal Securities Rulemaking Board. The correct answer is option B. Federal Reserve Board. The Federal Reserve Board is central to monetary policy, including actions that affect interest rates and money supply. MSRB writes municipal securities rules, transfer agents manage ownership records, and OCC clears listed options. Question 14. For fiscal policy, which action is the clearest example inside the bond prices and yields study bank? Option A. Congress changes government spending or taxation. Option B. A market maker accepts a limit order. Option C. A mutual fund calculates NAV. Option D. A broker-dealer quotes a wider bid-ask spread. The correct answer is option A. Congress changes government spending or taxation. Fiscal policy involves government spending and taxation decisions, usually made by Congress and the executive branch. Bid-ask spreads, mutual fund NAV calculations, and order handling are securities market activities rather than fiscal policy. Question 15. Under rising interest rates, what generally happens to outstanding bond prices on a bond prices and yields exam prep check? Option A. They stop paying coupons. Option B. They always rise above PAR. Option C. They become risk-free. Option D. They tend to fall. The correct answer is option D. They tend to fall. Bond prices generally move inversely to interest rates, so existing bonds tend to fall when rates rise. Bonds do not always rise above PAR, do not become risk-free, and normally continue paying coupons unless the issuer defaults or terms differ. Question 16. Within financial statements, which report shows assets, liabilities, and equity in this bond prices and yields practice set? Option A. Prospectus supplement. Option B. Trade confirmation. Option C. Balance sheet. Option D. Income statement. The correct answer is option C. Balance sheet. A balance sheet shows a company's assets, liabilities, and owner's equity at a point in time. An income statement reports revenues and expenses, a trade confirmation confirms a transaction, and a prospectus supplement updates offering information. Question 17. Behind a company earnings review, which statement focuses on revenues and expenses for the bond prices and yields review? Option A, customer account statement. Option B, income statement. Option C, order ticket. Option D, balance sheet. The correct answer is option B, income statement. An income statement summarizes revenues, expenses, and profit or loss over a period. A balance sheet shows financial position, an order ticket documents an order, and an account statement summarizes customer holdings and activity. Question 18. Compared with a recession trough, which phase usually signals improving business activity during a bond prices and yields quiz drill? Option A, expansion. Option B, contraction. Option C, liquidation. Option D, default. The correct answer is option A, expansion. Expansion is the business cycle phase associated with improving output, employment, and economic activity. Contraction is weakening activity, liquidation is winding down assets, and default is failure to meet an obligation. Question 19. Between public news and private tips, which phrase signals illegal insider trading risk inside the bond prices and yield study bank? Option A, material non-public information used in breach of a duty. Option B, a mutual fund prospectus delivered on time. Option C, a published annual report read by all investors. Option D, a listed option contract with a strike price. The correct answer is option A, material non-public information used in breach of a duty. Illegal insider trading risk centers on trading while possessing material non-public information in violation of a duty. Public reports, option contract terms, and proper prospectus delivery do not create that insider trading violation by themselves. Question 20. Among offering types, which one sells shares to the public for the first time on a bond prices and yields exam prep check? Option A, dividend reinvestment. Option B, stock split. Option C, secondary market trade. Option D, initial public offering. The correct answer is option D, initial public offering. An initial public offering is the first public sale of a company's shares. A stock split changes share count, a secondary market trade occurs between investors, and dividend reinvestment uses dividends to buy more shares. Question 21. A cross-firm commitment underwriting, who assumes the risk of unsold shares in this bond prices and yields practice set? Option A, rating agency. Option B, underwriter. Option C, retail buyer. Option D, transfer agent. The correct answer is option B, underwriter. In a firm commitment underwriting, the underwriter buys the securities from the issuer and assumes resale risk. Transfer agents record ownership, retail buyers purchase securities, and rating agencies assess creditworthiness. Question 22. Regarding best efforts offerings, what is the underwriter mainly promising for the bond prices and yields review? Option A, to use reasonable effort to sell the issue. Option B, to set monetary policy for the market. Option C, to buy the entire issue for its own account. Option D, to guarantee a profit to every investor. The correct answer is option A, to use reasonable effort to sell the issue. In a best efforts offering, the underwriter agrees to use reasonable effort to sell securities but does not guarantee the entire issue will be sold. Firm commitment involves buying the issue, investment profits are never guaranteed, and monetary policy is a Federal Reserve function. Question 23. Considering shelf registration, what is the main benefit for an issuer during a bond prices and yields quiz drill? Option A, it guarantees a fixed market price. Option B, it allows securities to be registered for later sale. Option C, it eliminates all disclosure obligations forever. Option D, it changes common stock into debt automatically. The correct answer is option B, it allows securities to be registered for later sale. Shelf registration lets an eligible issuer register securities and sell them later when market conditions are favorable. It does not eliminate disclosure requirements, guarantee market prices, or automatically convert equity into debt. Question 24. Suppose an investor wants key details about a new public offering. Which document is central inside the bond prices and yield study bank? Option A, customer complaint form. Option B, prospectus. Option C, proxy ballot only. Option D, margin agreement. The correct answer is option B, prospectus. A prospectus provides material information about a registered offering so investors can make informed decisions. Proxy ballots relate to shareholder voting, complaint forms document grievances, and margin agreements govern borrowing in a margin account. Question 25. Imagine Regulation D is being tested. Which concept is most likely involved on a bond prices and yields exam prep check? Option A, mutual fund NAV pricing only. Option B, proxy voting deadlines only. Option C, private placement exemptions. Option D, FDIC deposit insurance. The correct answer is option C, private placement exemptions. Regulation D is associated with private offerings that may be exempt from full SEC registration. FDIC insurance, proxy deadlines, and mutual fund NAV pricing are separate topics. Question 26. Assume a shareholder owns common stock. Which right is commonly expected in this bond prices and yields practice set? Option A, guaranteed dividend payments. Option B, first claim before creditors in liquidation. Option C, voting on certain corporate matters. Option D, insurance against market losses. The correct answer is option C, voting on certain corporate matters. Common shareholders commonly have voting rights on important corporate matters. Dividends are not guaranteed, creditors and preferred holders have higher liquidation priority, and market losses are not insured. Question 27. Given liquidation priority, which security usually stands ahead of common stock for the bond prices and yields review? Option A, common stock. Option B, voting proxy. Option C, preferred stock. Option D, warrant. The correct answer is option C, preferred stock. Preferred stock generally has a higher claim than common stock in liquidation and often has dividend preference. Common stock is junior, warrants are rights to buy securities, and a voting proxy is not a security with liquidation priority. Question 28. Based on convertibility, what can convertible preferred shares usually become during a bond prices and yields quiz drill? Option A, customer complaints. Option B, treasury bills. Option C, bank deposits. Option D, common shares. The correct answer is option D, common shares. Convertible preferred stock can usually be exchanged for a stated number of common shares. Bank deposits, treasury bills, and customer complaints are unrelated to preferred stock conversion features. Question 29. Since rights are issued to current shareholders, what do they usually allow inside the bond prices and yield study bank? Option A, receiving FDIC protection on stock. Option B, buying additional shares before the public at a set price. Option C, avoiding all federal securities laws. Option D, borrowing money from a broker with no margin rules. The correct answer is option B, buying additional shares before the public at a set price. Rights usually let existing shareholders buy additional shares, often at a subscription price and before a public sale. They do not remove margin rules, insure stock against loss, or exempt investors from securities laws. Question 30. Once Form U4 is filed, what purpose does it mainly serve on a bond prices and yields exam prep check? Option A, redeeming mutual fund shares at NAV. Option B, guaranteeing a customer against investment losses. Option C, creating a stock split record date. Option D, registering or updating an associated person's industry information. The correct answer is option D, registering or updating an associated person's industry information. Form U4 is used to register an associated person and disclose required background information. Mutual fund redemptions, investment guarantees, and stock split record dates are unrelated to Form U4. Question 31. Unless Form U5 is understood, what event does it most directly report in this bond prices and yields practice set? Option A, pricing an exchange-traded fund. Option B, declaring a corporate dividend. Option C, opening a new cash account. Option D, termination of a registered person's association with a firm. The correct answer is option D, termination of a registered person's association with a firm. Form U5 is used to terminate a registered person's association and report required termination information. Cash account openings, dividends, and ETF pricing are handled through different documents or processes. Question 32. While bond yields rise, which price relationship should be remembered for the bond prices and yields review? Option A, bond prices become unrelated to rates. Option B, bond prices generally decline. Option C, bond prices always equal coupon rate. Option D, bond prices must convert into stock. The correct answer is option B, bond prices generally decline. Bond prices generally move inversely to yields, so prices tend to decline when yields rise. Prices are not the same as coupon rates. Rates are highly relevant to bond pricing, and conversion only applies to convertible securities. Question 33. Whenever a bond pays stated interest, which term names that stated rate during a bond prices and yields quiz drill? Option A, expense ratio. Option B, coupon rate. Option C, bid price. Option D, NAV. The correct answer is option B, coupon rate. The coupon rate is the stated interest rate the issuer pays on a bond's par value. Bid price is a purchase quote, NAV is fund value per share, and expense ratio measures fund operating costs. Question 34. Although market prices fluctuate, what is the usual par value of a corporate bond inside the Bond Prices and Yields Study Bank? Option A, $1,000. Option B, $1. Option C, $10. Option D, $100,000. The correct answer is option A, $1,000. Corporate bonds are commonly quoted with a $1,000 par value for exam purposes. The other amounts may appear in other contexts, but they are not the standard corporate bond par value tested on the SIE. Question 35. Because Treasury bills are short-term, how are they commonly issued on a Bond Prices and Yields exam prep check? Option A, with voting rights. Option B, with mutual fund breakpoints. Option C, as preferred stock. Option D, at a discount from face value. The correct answer is option D, at a discount from face value. Treasury bills are short-term government obligations commonly issued at a discount and mature at face value. They do not carry voting rights, are not preferred stock, and do not involve mutual fund breakpoint pricing. Question 36. Beyond corporate bonds, which municipal bond is backed by taxing power in this Bond Prices and Yields practice set? Option A, convertible debenture. Option B, exchange traded note. Option C, revenue bond. Option D, general obligation bond. The correct answer is option D, general obligation bond. A general obligation municipal bond is backed by the issuer's taxing power and credit. Revenue bonds rely on project revenues, convertible debentures are corporate debt, and ETNs are unsecured debt products linked to an index or benchmark. Question 37. Near a toll road financing, which municipal bond type is most likely for the Bond Prices and Yields review? Option A, general obligation bond. Option B, treasury bond. Option C, revenue bond. Option D, banker's acceptance. The correct answer is option C, revenue bond. A revenue bond is paid from revenue generated by a specific project, such as tolls from a toll road. General obligation bonds rely on taxes, treasury bonds are federal government debt, and bankers' acceptances are money market instruments. Question 38. Inside a credit risk question, which event is the biggest concern during a Bond Prices and Yields quiz drill? Option A, proxy mailing. Option B, issuer default. Option C, stock split. Option D, dividend record date. The correct answer is option B, issuer default. Credit risk is the risk that an issuer cannot meet its payment obligations, including interest or principal. Stock splits, proxy mailings, and record dates are corporate or administrative events rather than default risk. Question 39. Outside normal maturity, what does a callable bond allow the issuer to do inside the Bond Prices and Yields Study Bank? Option A, remove all interest rate risk. Option B, redeem the bond before maturity. Option C, convert every bond into a bank deposit. Option D, force investors to vote. The correct answer is option B, redeem the bond before maturity. A callable bond allows the issuer to redeem the bond before maturity according to the bond's terms. Calling a bond does not create voting rights, convert it into a deposit, or eliminate interest rate risk for investors. Question 40. Through front running, what improper action is being tested on a Bond Prices and Yields exam prep check? Option A, filing an accurate Form U4. Option B, buying a mutual fund at NAV. Option C, trading ahead of a known customer block order. Option D, holding a diversified portfolio. The correct answer is option C, trading ahead of a known customer block order. Front running involves improperly trading ahead of a known customer block order that could affect the market price. Mutual fund purchases at NAV, diversification, and accurate registration filings are not front running. Question 41. Around options basics, what does a call option give the buyer in this Bond Prices and Yields practice set? Option A, the obligation to sell stock short. Option B, the right to buy the underlying security. Option C, FDIC insurance on shares. Option D, ownership of a bond coupon. The correct answer is option B, the right to buy the underlying security. A call option gives the buyer the right, not the obligation, to buy the underlying security at the strike price. It is not an obligation to sell short, a bond coupon, or insurance on stock ownership. Question 42. Alongside calls, what does a put option give the buyer for the bond prices and yields review? Option A. The guarantee of a dividend. Option B. The right to receive bank interest. Option C. The duty to underwrite an IPO. Option D. The right to sell the underlying security. The correct answer is option D. The right to sell the underlying security. A put option gives the buyer the right to sell the underlying security at the strike price. It does not create bank interest, underwriter duties, or guaranteed dividends. Question 43. Following an option purchase, what is the premium during a bond prices and yields quiz drill? Option A. The annual fee charged by FINRA. Option B. The record date for a dividend. Option C. The price paid for the option contract. Option D. The PAR value of a bond. The correct answer is option C. The price paid for the option contract. The premium is the price the option buyer pays to acquire the contract. Bond PAR value, FINRA fees, and dividend record dates are separate concepts. Question 44. Unlike market price, what does an option strike price define inside the bond prices and yields study bank? Option A. The fund's net asset value. Option B. The bond's credit rating. Option C. The customer's tax bracket. Option D. The exercise price of the option. The correct answer is option D. The exercise price of the option. The strike price is the price at which the option can be exercised. NAV, credit rating, and tax bracket are unrelated to the contractual exercise price. Question 45. Similar to IPO restrictions, who may be limited from buying certain new issues on a bond prices and yields exam prep check? Option A. Every unaffiliated retail investor. Option B. Only transfer agents recording shares. Option C. Only municipal issuers. Option D. Restricted persons associated with broker-dealers. The correct answer is option D. Restricted persons associated with broker-dealers. FINRA new issue restrictions can limit purchases by restricted persons, including many broker-dealer associated persons. The rule does not ban every retail investor, and municipal issuers or transfer agents are not the central buyer category being tested. Question 46. Instead of being uncovered, what backs a covered call in this bond prices and yields practice set? Option A. A checking account only. Option B. A long position in the underlying stock. Option C. A short position in unrelated bonds. Option D. A customer complaint file. The correct answer is option B. A long position in the underlying stock. A covered call is backed by owning the underlying stock against the short call obligation. Unrelated bonds, checking accounts, and complaint files do not cover the delivery obligation on the call. Question 47. Beside an options account opening, which disclosure is most associated with listed options for the bond prices and yields review? Option A. Official statement only. Option B. Form U5 termination notice. Option C. Options disclosure document. Option D. FDIC insurance brochure. The correct answer is option C. Options disclosure document. The options disclosure document explains standardized options risks and characteristics for options customers. Official statements relate to municipal offerings, FDIC brochures relate to deposits, and Form U5 concerns registration termination. Question 48. Beneath mutual fund pricing, what does NAV represent during a bond prices and yields quiz drill? Option A. The commission charged by a market maker. Option B. The highest price paid that day on an exchange. Option C. Assets minus liabilities divided by shares outstanding. Option D. The bond coupon divided by PR only. The correct answer is option C. Assets minus liabilities divided by shares outstanding. NAV is calculated as fund assets minus liabilities divided by shares outstanding. It is not the day's exchange high, a market maker commission, or only a bond coupon calculation. Question 49. Above open-end fund pricing, how do closed-end fund shares usually trade inside the bond prices and yields study bank? Option A. Only through treasury auctions. Option B. Only by redemption at NAV. Option C. On an exchange at market prices. Option D. Only through FDIC-insured accounts. The correct answer is option C. On an exchange at market prices. Closed-end fund shares generally trade on exchanges at market prices that can be above or below NAV. Open-end mutual funds redeem at NAV, and FDIC accounts or treasury auctions are unrelated distribution methods. Question 50. Against market integrity, which description best fits a pump and dump scheme on a bond prices and yields exam prep check? Option A. Spreading hype to raise a price before selling inflated shares. Option B. Settling a regular way stock trade on schedule. Option C. Reducing a mutual fund sales charge at a breakpoint. Option D. Buying shares after reading a filed prospectus. The correct answer is option A. Spreading hype to raise a price before selling inflated shares. A pump and dump scheme uses misleading promotion to inflate a security's price before selling into the artificial demand. Prospectus review, breakpoint pricing, and normal settlement are legitimate concepts, not manipulation schemes. Question 51. Toward mutual fund sales charges, which share class commonly has a front-end load in this bond prices and yields practice set? Option A. Class B shares only. Option B. Class A shares. Option C. Treasury shares. Option D. Preferred shares. The correct answer is option B. Class A shares. Class A mutual fund shares commonly charge a front-end sales load. Class B shares have historically been associated with deferred sales charges, while treasury shares and preferred shares are corporate equity concepts rather than mutual fund share classes. Question 52. From breakpoint pricing, what happens when a mutual fund purchase reaches a breakpoint for the bond prices and yields review? Option A. The shares become municipal bonds. Option B. The fund stops calculating NAV. Option C. The sales charge percentage is reduced. Option D. The investment becomes FDIC insured. The correct answer is option C. The sales charge percentage is reduced. A breakpoint reduces the sales charge percentage when qualifying mutual fund purchases reach certain dollar levels. It does not create FDIC insurance and NAV calculations or convert shares into municipal bonds. Question 53. Into right of accumulation rules, what may help investors receive lower sales charges during a bond prices and yields quiz drill? Option A. Avoiding all prospectus delivery. Option B. Filing a suspicious activity report. Option C. Combining current and past eligible fund holdings. Option D. Buying only treasury bills. The correct answer is option C. Combining current and past eligible fund holdings. Rights of accumulation can let investors combine eligible holdings to qualify for reduced mutual fund sales charges. SAR filing, treasury bill purchases, and skipping prospectus delivery do not create breakpoint eligibility. Question 54. About a letter of intent, what does the customer usually state inside the bond prices and yields study bank? Option A. A guarantee to underwrite shares. Option B. An intention to invest enough to qualify for a breakpoint. Option C. A request to terminate registration. Option D. A promise that no risk exists. The correct answer is option B. An intention to invest enough to qualify for a breakpoint. A letter of intent states the investor's intention to invest enough over a permitted period to qualify for a mutual fund breakpoint. It does not guarantee no risk, terminate registration, or create an underwriting commitment. Question 55. Concerning 529 plans, what is their primary purpose on a bond prices and yields exam prep check? Option A. Speculating on short-term options only. Option B. Replacing all retirement accounts. Option C. Saving for qualified education expenses. Option D. Insuring brokerage accounts against losses. The correct answer is option C. Saving for qualified education expenses. 529 plans are designed to help save for qualified education expenses with potential tax advantages. They are not option speculation accounts, brokerage insurance, or replacements for all retirement accounts. Question 56. Relating to continuing education, which two parts are commonly tested in this bond prices and yields practice set? Option A. Primary element and secondary element. Option B. Regulatory element and firm element. Option C. Coupon element and PR element. Option D. Bid element and ask element. The correct answer is option B. Regulatory element and firm element. Continuing education is commonly tested as having a regulatory element and a firm element. Bid and ask quotes, coupon and PR values, and primary and secondary markets are separate SIE topics. Question 57. Reviewing DPPs, which feature should raise a liquidity concern for the bond prices and yields review? Option A. They are FDIC insured deposits. Option B. They are generally illiquid. Option C. They trade intraday like large cap stocks. Option D. They have no tax reporting. The correct answer is option B. They are generally illiquid. Direct participation programs are often unlisted and generally illiquid, making resale difficult. They do not trade like liquid large cap stocks, are not FDIC insured deposits, and can involve complex tax reporting. Question 58. Studying rights, what do they primarily invest in during a bond prices and yields quiz drill? Option A, real estate equity or debt. Option B, insurance policies only. Option C, customer margin loans only. Option D, only treasury bills. The correct answer is option A, real estate equity or debt. REITs invest primarily in real estate equity, mortgages, or related real estate assets. Treasury bills, customer margin loans, and insurance policies do not describe the core REIT investment focus. Question 59. Testing hedge fund basics, which trade is commonly expected inside the bond prices and yields study bank? Option A, daily redemption at mutual fund NAV. Option B, limited liquidity and higher minimums. Option C, FDIC insurance on fund shares. Option D, no investment risk. The correct answer is option B, limited liquidity and higher minimums. Hedge funds commonly have limited liquidity, higher minimum investments, and private offering characteristics. Daily NAV redemption describes open-end mutual funds. FDIC insurance does not apply to hedge fund shares and risk still exists. Question 60. Checking exchange-traded products, how are ETFs and ETNs commonly accessed on a bond prices and yields exam prep check? Option A. They are always redeemed only once daily at NAV. Option B. They are insured bank savings deposits. Option C. They are customer complaint forms. Option D. They generally trade on exchanges during the trading day. The correct answer is option D. They generally trade on exchanges during the trading day. ETFs and ETNs are exchange-traded products that investors generally buy and sell on exchanges during the trading day. Once daily NAV redemption describes open-end mutual funds, while bank deposits and complaint forms are unrelated. Question 61. Measuring MSRB rules, which market is the main focus in this bond prices and yields practice set? Option A, corporate income tax filing. Option B, FDIC bank deposit insurance. Option C, foreign currency exchange only. Option D, municipal securities activity. The correct answer is option D, municipal securities activity. The MSRB writes rules for municipal securities dealers, municipal advisors, and related municipal market activity. Tax filing, FDIC insurance, and foreign currency exchange are not the MSRB's main regulatory focus. Question 62. Identifying capital risk, what is the investor worried about losing for the bond prices and yields review? Option A, only voting rights. Option B, only a proxy statement. Option C, the invested principal. Option D, only dividend dates. The correct answer is option C, the invested principal. Capital risk is the risk of losing some or all of the amount invested. Voting rights, dividend dates, and proxy statements are not the investor's invested principal. Question 63. Spotting gifts and gratuities rules, what is the core concern during a bond prices and yields quiz drill? Option A, changing a mutual fund's NAV formula. Option B, improperly influencing employees of others. Option C, pricing treasury bills at auction. Option D, calculating a stock split ratio. The correct answer is option B, improperly influencing employees of others. Gifts and gratuities rules are designed to prevent improper influence over employees of other firms or organizations. Stock split math, treasury auction pricing, and mutual fund NAV calculations are separate operational or product topics. Question 64. Choosing inflation risk, which investment problem is being tested inside the bond prices and yields study bank? Option A, purchasing power declines over time. Option B, a customer opens a trust account. Option C, a market order executes immediately. Option D, a stock split increases share count. The correct answer is option A, purchasing power declines over time. Inflation risk is the risk that rising prices reduce the purchasing power of investment returns. Market orders, trust accounts, and stock splits do not directly define loss of purchasing power. Question 65. Selecting outside business activities, what should a registered person generally provide on a bond prices and yields exam prep check? Option A, prior written notice to the firm. Option B, a guarantee of customer profits. Option C, a promise to ignore firm supervision. Option D, a secret personal account only. The correct answer is option A, prior written notice to the firm. Outside business activities generally require prior written notice so the firm can evaluate and supervise potential conflicts. Profit guarantees, secret accounts, and avoiding supervision are not acceptable responses. Question 66. Matching liquidity risk, which warning sign fits best in this bond prices and yields practice set? Option A, An automatic tax exemption for all products. Option B. A guaranteed gain from market timing. Option C. A fixed voting deadline. Option D. Difficulty selling quickly at a fair price. The correct answer is option D. Difficulty selling quickly at a fair price. Liquidity risk means an investor may not be able to sell an investment quickly at a fair price. Guaranteed gains, voting deadlines, and universal tax exemptions are not liquidity risk definitions. Question 67. Calculating market risk. What kind of risk affects broad securities prices for the bond prices and yields review? Option A. Unsystematic company-specific risk only. Option B. Transfer agent record risk. Option C. Systematic risk. Option D. FDIC coverage risk. The correct answer is option C. Systematic risk. Market risk is systematic risk that affects broad markets or asset classes. Company-specific risk is unsystematic, while FDIC and transfer agent issues do not define broad market price risk. Question 68. Estimating non-systematic risk. Which method can reduce it during a bond prices and yields quiz drill? Option A. Using only market rumors. Option B. Diversification across securities and sectors. Option C. Ignoring customer objectives. Option D. Putting all funds in one stock. The correct answer is option B. Diversification across securities and sectors. Diversification can reduce company-specific or non-systematic risk by spreading exposure. Concentration, ignoring objectives, and relying on rumors can increase risk or violate sound practice. Question 69. Reading hedging questions. What is the main purpose of a hedge inside the bond prices and yields study bank? Option A. To avoid account documentation. Option B. To eliminate all rules on trading. Option C. To guarantee the highest possible return. Option D. To reduce or offset risk exposure. The correct answer is option D. To reduce or offset risk exposure. A hedge is designed to reduce or offset a specific risk exposure. It does not guarantee maximum returns, remove trading rules, or eliminate account documentation requirements. Question 70. Interpreting a market order. What is the customer prioritizing on a bond prices and yields exam prep check? Option A. A dividend record date. Option B. A reduced mutual fund sales load. Option C. A specific minimum or maximum price. Option D. Immediate execution. The correct answer is option D. Immediate execution. A market order prioritizes prompt execution at the best available price. Limit prices, dividend dates, and mutual fund sales loads are separate issues. Question 71. Tracking a limit order. What condition must be satisfied in this bond prices and yields practice set? Option A. Immediate conversion into a bond. Option B. Automatic cancellation of all dividends. Option C. Execution at the limit price or better. Option D. Execution at any available price. The correct answer is option C. Execution at the limit price or better. A limit order executes only at the specified limit price or a better price. It does not guarantee execution at any price, affect dividends, or convert securities. Question 72. Comparing stop orders. What happens after the stop price is triggered for the bond prices and yields review? Option A. The order guarantees the stop price. Option B. The order becomes a dividend. Option C. The order generally becomes a market order. Option D. The order becomes a prospectus. The correct answer is option C. The order generally becomes a market order. A standard stop order generally becomes a market order once the stop price is reached or passed. It does not become a prospectus, guarantee the exact stop price, or create a dividend. Question 73. Distinguishing GTC orders. What does good till cancelled mean during a bond prices and yields quiz drill? Option A. The order remains open until cancelled or executed, subject to firm rules. Option B. The order is always a market order. Option C. The order applies only to mutual funds. Option D. The order must execute only at the opening bell. The correct answer is option A. The order remains open until cancelled or executed, subject to firm rules. A good till cancelled order remains active until it is executed or cancelled, subject to firm and exchange time limits. It is not limited to the opening, not always a market order, and not only for mutual funds. Question 74. Recognizing the bid quote. What does it show inside the bond prices and yields study bank? Option A. The PAR value of a municipal bond only. Option B. The price a dealer is willing to pay to buy. Option C. The annual dividend rate only. Option D. The price a customer must pay for a prospectus. The correct answer is option B. The price a dealer is willing to pay to buy. The bid is the price a dealer or market maker is willing to pay to buy a security. Prospectus costs, dividend rates, and PER value do not define the bid quote. Question 75. Noticing the ask quote, what does it show on a bond prices and yields exam prep check? Option A. The price a dealer is willing to accept to sell. Option B. The date AU5 is filed. Option C. The maximum gift limit only. Option D. The amount of FDIC insurance available. The correct answer is option A. The price a dealer is willing to accept to sell. The ask is the price at which a dealer or market maker is willing to sell. FDIC insurance, gift limits, and Form U5 filings are unrelated to the ask quote. Question 76. Evaluating agency capacity. How is the broker-dealer acting in this bond prices and yields practice set? Option A. As the issuer of the security. Option B. As the customer's tax authority. Option C. As a bank deposit insurer. Option D. As an agent arranging a trade for the customer. The correct answer is option D. As an agent arranging a trade for the customer. In agency capacity, the broker-dealer acts on behalf of the customer and may charge a commission. The broker-dealer is not the issuer, tax authority, or deposit insurer in that capacity. Question 77. Assessing principal capacity. How is the broker-dealer acting for the bond prices and yields review? Option A. Only mailing proxy statements. Option B. Only calculating GDP. Option C. Trading from or into its own inventory. Option D. Only filing tax returns. The correct answer is option C. Trading from or into its own inventory. In principal capacity, the broker-dealer buys from or sells to the customer from its own inventory and may charge a markup or markdown. Proxy mailing, GDP calculation, and tax filing do not define principal trading capacity. Question 78. Verifying a long stock position. What does the investor own during a bond prices and yields quiz drill? Option A. Shares purchased and held. Option B. A put contract only. Option C. Shares borrowed and sold. Option D. A municipal official statement. The correct answer is option A. Shares purchased and held. A long stock position means the investor owns shares. Borrowing and selling shares describes short selling, while a put contract and an official statement are different instruments or documents. Question 79. Confirming a short sale. What is the investor initially doing inside the bond prices and yield study bank? Option A. Selling borrowed shares. Option B. Buying a certificate of deposit. Option C. Receiving a guaranteed dividend. Option D. Redeeming mutual fund shares at NAV. The correct answer is option A. Selling borrowed shares. A short sale starts with selling borrowed shares with the expectation of buying them back later. CDs, mutual fund redemptions, and guaranteed dividends are not short sale mechanics. Question 80. Clarifying private securities transactions. What is the key compliance step on a bond prices and yields exam prep check? Option A. Providing required written notice and obtaining approval when required. Option B. Keeping the activity hidden from the firm. Option C. Calling it a dividend to avoid review. Option D. Routing it only through a personal email account. The correct answer is option A. Providing required written notice and obtaining approval when required. Private securities transactions require proper written notice and, when compensation is involved, firm approval and supervision. Hiding the activity, relabelling it, or using personal email to avoid review creates compliance problems. Question 81. Separating statutory disqualification. Which issue can affect association with a firm in this bond prices and yields practice set? Option A. Certain criminal, regulatory, or misconduct events. Option B. Owning a diversified mutual fund. Option C. Reading an official statement. Option D. Receiving a routine trade confirmation. The correct answer is option A. Certain criminal, regulatory, or misconduct events. Statutory disqualification can arise from serious criminal, regulatory, or misconduct events and may restrict association with a member firm. Diversified investing, trade confirmations, and reading offering documents are not statutory disqualification events. Question 82. Linking unregistered persons to commissions. What practice is generally prohibited for the bond prices and yields review? Option A. Paying transaction-based compensation to unregistered persons. Option B. Sending a customer an account statement. Option C. Quoting a bid and ask spread. Option D. Calculating a bond's coupon payment. The correct answer is option A. Paying transaction-based compensation to unregistered persons. Firms generally may not pay transaction-based compensation to unregistered persons for securities business. Account statements, market quotes, and coupon calculations are not the prohibited payment practice. Question 83. Mapping customer complaints. Why must firms track written complaints during a bond prices and yields quiz drill? Option A. They can trigger record-keeping and reporting obligations. Option B. They replace all trade confirmations. Option C. They convert common stock into preferred stock. Option D. They automatically guarantee customer reimbursement. The correct answer is option A. They can trigger record-keeping and reporting obligations. Written customer complaints can create record-keeping, supervisory, and reporting obligations for firms. They do not automatically guarantee reimbursement, replace confirmations, or change the type of security owned. Question 84. Framing a 2-for-1 stock split. What usually happens to share count and price per share inside the bond prices and yields study bank? Option A. Shares become bonds automatically. Option B. Shares double and price per share is adjusted downward. Option C. Shares disappear and price becomes zero. Option D. Shares gain FDIC insurance. The correct answer is option B. Shares double and price per share is adjusted downward. In a 2-for-1 split, the number of shares doubles and the price per share is adjusted downward, so total value is generally unchanged at the split moment. Shares do not disappear, become bonds, or receive FDIC insurance. Question 85. Discovering senior exploitation concerns. What should firms be alert to on a bond prices and yields exam prep check? Option A. Possible financial exploitation of specified adults. Option B. Only treasury auction schedules. Option C. Only normal dividend declarations. Option D. Only routine ETF expense ratios. The correct answer is option A. Possible financial exploitation of specified adults. Firms should be alert to signs of possible financial exploitation involving seniors and other specified adults. ETF expenses, dividend declarations, and treasury schedules are ordinary investment topics rather than exploitation red flags. Question 86. Remembering regular way stock settlement, which timeframe is generally tested now in this bond prices and yields practice set? Option A. T+1. Option B. Only at month end. Option C. T+5. Option D. Same day for all securities. The correct answer is option A. T+1. Regular way settlement for many securities transactions is generally tested as T+1. T+5, universal same-day settlement, and month-end only settlement do not match the current common SIE settlement concept. Question 87. Learning political contribution rules. Which business risk can excessive contributions create for the bond prices and yields review? Option A. Guaranteed IPO allocation. Option B. A higher FDIC insurance limit. Option C. Restrictions on municipal securities business. Option D. Automatic SIPC reimbursement. The correct answer is option C. Restrictions on municipal securities business. Political contribution rules can restrict municipal securities business when covered contributions exceed permitted thresholds. SIPC reimbursement, IPO allocations, and FDIC limits are unrelated to political contribution restrictions. Question 88. Predicting cash account requirements. What must the customer do during a bond prices and yields quiz drill? Option A. Borrow automatically from the broker. Option B. Short every position. Option C. Pay fully for purchases. Option D. Avoid all trade confirmations. The correct answer is option C. Pay fully for purchases. A cash account requires the customer to pay in full for securities purchases. Borrowing is a margin account feature, shorting is not required, and confirmations are still part of customer communications. Question 89. Explaining margin accounts. What feature makes them different from cash accounts inside the bond prices and yield study bank? Option A. Customers may borrow from the broker-dealer using securities as collateral. Option B. Customers receive guaranteed gains. Option C. Customers become issuers of securities. Option D. Customers avoid all suitability rules. The correct answer is option A. Customers may borrow from the broker-dealer using securities as collateral. A margin account allows a customer to borrow from the broker-dealer with securities serving as collateral. Margin does not guarantee gains, remove conduct rules, or make the customer an issuer. Question 90. Applying discretionary authority. What must a representative generally have before trading on a bond prices and yields exam prep check? Option A. A dividend announcement. Option B. A tax refund check. Option C. Written customer authorization accepted by the firm. Option D. Only a verbal hint from a friend. The correct answer is option C. Written customer authorization accepted by the firm. Discretionary trading generally requires written customer authorization and firm acceptance before the representative can decide trade details. A friend's hint, dividend news, or a tax refund does not create discretionary authority. Question 91. Solving custodial account ownership. Who owns the assets under UTMA-style registration in this bond prices and yields practice set? Option A. The transfer agent owns the assets. Option B. The minor beneficiary owns the assets. Option C. The custodian owns the assets personally forever. Option D. The broker-dealer owns the assets. The correct answer is option B. The minor beneficiary owns the assets. In a custodial account, the minor is the beneficial owner while the custodian manages the account until the required age. The custodian, broker-dealer, and transfer agent do not personally own the assets. Question 92. Handling AML placement. What is happening in the first stage of money laundering for the bond prices and yields review? Option A. A dividend record date is set. Option B. Illicit funds enter the financial system. Option C. A stock split is approved. Option D. Funds are fully taxed and reported as wages. The correct answer is option B. Illicit funds enter the financial system. Placement is the stage where illicit funds are introduced into the financial system. Tax reporting, dividend dates, and stock split approvals do not define the first stage of money laundering. Question 93. Reporting layering. What is the money launderer trying to do during a bond prices and yields quiz drill? Option A. Openly disclose the illegal source. Option B. Calculate a mutual fund breakpoint. Option C. Set the federal funds rate. Option D. Conceal the source of funds through complex transactions. The correct answer is option D. Conceal the source of funds through complex transactions. Layering uses transactions to make the source of illicit funds harder to trace. Open disclosure, interest rate policy, and mutual fund sales charge calculations are unrelated to layering. Question 94. Filing a SIE. Which situation is most relevant inside the bond prices and yields study bank? Option A. Every mutual fund purchase below $100. Option B. Suspicious activity that meets reporting criteria. Option C. Every ordinary dividend payment. Option D. Any customer who asks for a prospectus. The correct answer is option B. Suspicious activity that meets reporting criteria. A suspicious activity report is filed when suspicious activity meets the applicable reporting criteria. Ordinary dividends, prospectus requests, and small routine purchases are not automatically SIE events. Question 95. Maintaining CTR awareness. Which transaction generally triggers the report on a bond prices and yields exam prep check? Option A. Cash transactions over $10,000 in one business day. Option B. Every online login attempt. Option C. A quarterly account statement. Option D. Any stock trade over $100. The correct answer is option A. Cash transactions over $10,000 in one business day. A currency transaction report generally applies to cash transactions over $10,000 in one business day. Stock trade value, login attempts, and account statements do not define the CTR trigger. Question 96. Protecting against OFAC violations. What must firms screen for in this bond prices and yields practice set? Option A. Only stock dividend rates. Option B. Sanctioned persons and blocked entities. Option C. Only mutual fund expense ratios. Option D. Only option strike prices. The correct answer is option B. Sanctioned persons and blocked entities. Firms must screen for sanctioned persons and blocked entities to avoid prohibited transactions. Dividend rates, expense ratios, and strike prices are investment terms, not OFAC screening targets. Question 97. Preventing privacy violations. Which information does Regulation SP focus on for the bond prices and yields review? Option A. Only municipal coupon rates. Option B. Non-public personal customer information. Option C. Only treasury auction dates. Option D. Only stock split ratios. The correct answer is option B. Non-public personal customer information. Regulation SP addresses privacy and safeguarding of non-public personal customer information. Stock split ratios, treasury auction dates, and coupon rates are securities data rather than protected customer privacy information. Question 98. Detecting KYC obligations. What must a firm reasonably know during a bond prices and yields quiz drill? Option A. Only the market maker's office address. Option B. Only the customer's favorite stock symbol. Option C. Essential facts about the customer. Option D. Only the issuer's logo color. The correct answer is option C, essential facts about the customer. Know your customer obligations require firms to use reasonable diligence to know essential facts about each customer. Favorite symbols, logo colors, and office addresses do not satisfy the core customer information requirement. Question 99. Avoiding unsuitable recommendations, what should a representative consider inside the bond prices and yields study bank? Option A. Only the representative's commission goal. Option B. Customer profile and investment objectives. Option C. Only the stock's ticker length. Option D. Only internet rumors. The correct answer is option B, customer profile and investment objectives. Suitability and best interest analysis require attention to the customer profile, objectives, risk tolerance, and related facts. Commission goals, rumors, and ticker length are not proper bases for recommendations. Question 100. Completing Reg by Basics, what standard applies to retail recommendations on a bond prices and yields exam prep check? Option A. Acting in the retail customer's best interest. Option B. Replacing all FINRA rules. Option C. Ignoring conflicts if disclosed nowhere. Option D. Guaranteeing every recommendation will profit. The correct answer is option A. Acting in the retail customer's best interest. Regulation best interest requires broker-dealers to act in a retail customer's best interest when making recommendations. It does not guarantee profits, allow undisclosed conflicts to be ignored, or replace all FINRA obligations.